Yes, people, a very, very happy to all of you. Thank you so much, people. So, guys, we're doing this chapter called as Dissolution of Partnership Firm. Partnership or Partnership Firm? Firm, correct. So, last class, we've completed a discussion on yes. So, we saw, so they basically there are two situations, people. One is the situation where all partners are solvent. When all the partners are solvent, there could be two possibility. One is that all the partners have credit balance in the capital account. Credit balance in the capital account means what? This is the money that the firm owes to the partner. So at the end, whatever the balance is there in the cash account, that if you pay to the partners, with that cash account and capital account, both the ledgers will automatically close. Okay, not okay. Then we saw one question yesterday, that GMW question. In that, one or more partners have debit balance in their capital account. One or more partners have debit balance in their capital account. Now, still people are joining? Okay. One or more people have debit balance in the partner's capital account. So if you remember, in the case of GMW, who was having debit balance? W was having debit balance and G and M were having credit balance. Debit balance means what? This is the money that the firm has to receive from the partner. So first we collected money from the partner. In collection process, we didn't have any problem. The reason being the partners were all solvent. Partners being solvent means what? They have a lot of money at home. And when needed, they can bring in the money. So in that case, we call them as solvent partners. So W had brought in money, and with that money, we made the necessary payment for the external liability holders, and the remaining money thereafter, we paid it to G and M. With that, the capital account and the cash account got closed. Okay, not okay? Okay, okay. Now today we're going to see the next scenario where one or more partners are insolvent. One or more partners are insolvent, and here there's one partner or more partners have a debit balance, and that partner cannot bring in the money. Cannot bring in the money. In such case, what are we supposed to do is what we're going to discuss. And in the examination, the probability of question coming from this segment is very, very high. In the examination, the probability of question coming from this segment is very, very high. For this, I've chosen one simple question on my own, which is a question that we've already dealt with in the last class. Same question, GMW. Data also remains the same. Only one difference. In example 1, I said W was solvent. W was a partner having debit balance and he was solvent. And whatever the money was required, he got it from home. If I'm not wrong, 19 lakh rupees. Am I right? Yes. By cash, 19 lakh rupees, he got it. The same question, but here we're telling that W is declared as insolvent. He's become bankrupt and nothing is recovered from his private estate. So let's read this question, people. So example 2, on the liability side, we have Garner's capital 15 lakh rupees, Murray's capital 13 lakh rupees, and Wilkins capital 2 lakh rupees. Guys, these are the real names. And this question is a real based scenario. Numbers are imaginary. Numbers are imaginary. But the partner's name are original. And this case is 100% original case. Okay, not okay. Now, the total capital of all the partners put together are 30 lakhs. The money that we owe to external liabilities are 30 lakhs. Cash, 1 lakh we have, and other assets, 59 lakhs. If you read the additional information, it says that the firm is dissolved and all the assets have realized only 24 lakh rupees. Profit sharing ratio between the partners 1:1:3. W was declared insolvent, which means nothing is recovered from his private estate. Nothing is recovered from his private estates. Any difficulty? Now, here I've laid down the step-by-step procedures. Using this, we'll follow. Using this, we'll create the ledgers. What is the first step, people? First step is open realization account. Can I say in the normal question also we do the same thing? Open realization account. Second is partners capital account. Can I say in the normal scenario also? Normal scenario means which scenario? I'm talking about this scenario. We open partners capital account, no problem. Same way here also. Partners loan account. Loan account means what? Loan by partner, loan to partner. Both will come here. And cash account. So can I say step 1 is no different from the step that we used to do earlier? So whether it is a question of solvency of partner or insolvency, step 1 is same or not same? Ditto 100% same. Sir, by opening realization account or partners capital account, what are we supposed to do? When you open partners capital account, loan account and cash account, you note down their balance brought down in the respective accounts. From the question, whatever is the capital balance, loan balance, cash balance, note it down. Okay, not okay. The realization account that you've opened, what are you supposed to do? In that, transfer all the items appearing in the balance sheet to the respective accounts after doing rectifications, if any. So now you'll come across a scenario where you're supposed to do some rectifications. So after doing rectifications, then the final value are we supposed to transfer to the realization account. Imagine in the creditors ledger, there is a mistake. So you have to do rectification. Once rectification is done, you'll get a final creditor value. That creditor value is supposed to be transferred to the realization account. Okay, not okay. So transfer all the items appearing in the balance sheet to the above respective accounts after doing rectifications, if any. If any rectification is there, do it. Otherwise, directly you can transfer all the balances. So creditors will go to realization account. Assets will go to realization account. Capital ka balance will go to capital account. Loan ka balance, loan account. Cash ka balance, cash account. That is what point number 2 is saying. So can I say step 1 and step 2 is the same way that we do in case of solvency of partner. So far, the difference is not come. So far, difference is not come. How we used to prepare the accounts earlier, in the same way we are preparing. Third, realize all the assets and pay off all the liabilities as per the instruction given in the question. Can I say, in the case of solvency of partner, we do the same steps? So far, same, no difficulty. Yes. Note, check if any information regarding the payment of liability is missing. In other words, if question is silent about payment of liabilities, we assume that such liabilities are paid at book value itself. Okay, not okay. Till this, can I say everything is same? Okay. Let's see step number 4. Close realization account and the balancing figure will be called as profit and loss on realization. Such profit and loss on realization will be transferred to partner's capital account in their profit sharing ratio. Can I say step 1 to step 5 is a normal step that we do for all the questions, whether it is a solvency question or insolvency question. Step 1 to 5, no change. Now, from 6th step onwards, we'll have a complete change. So up to step 5, can I do the question now? Yes. Please open the ledger, people. How many ledgers will you open here? 3 ledger. One is realization ledger. Second is capital ledger. Third is cash ledger. Please open it fast. All in people, are you all with me? All in people. இருக்கீங்களா போயிட்டீங்களா All in people, am I audible to all of you? Nobody is responding. All in people, am I audible to all of you? Volume is less. Okay, now recording in progress. Very good. All in people, now please speak something.
Now it's
Yes,
fine.
sir.
Now we can hear you. Okay, sorry.
Sir.
Okay, recording got a little bit held in between. So till where did you listen me last?
What accounts to create?
Okay, in the ledger நான் prepare பண்ணது screen வந்துச்சுல அந்த டைம்ல.
Yes, sir.
Yes.
Okay,
Sir.
which means nothing you missed out. சரி, super. Realization account, debit side, credit side. Next is partners capital account. Partners capital account. How many partners, people? 3 partners. G, M, W. Particulars G, M, W. And last is cash account. Guys, realization account open. Now, please note on the balance for each and every ledger. So please tell me, what is the buy balance brought down? Buy balance brought down for GMW. 15 lakh, 13 lakh and 2 lakh. . Please tell me, what is the cash balance? 1 lakh rupees. 2 balance brought down 1 lakh rupees. Online people, are you all with me?
Yes, sir.
Yes, sir.
Yes, sir.
Fantastic.
Yes.
Can I say step 1 over? Step 2, transfer all the items to the balance sheet. In that, capital and cash balance is already transferred in form of balance brought down. Now all the assets and liabilities. 59 lakh will be transferred to realization account. Please tell me the journal entry. Journal entry. Realization account debit to other assets or to sundry assets. To sundry assets. 59 lakh rupees, people. And next is external liabilities. So buy sundry liabilities, 30 lakh rupees. Buy sundry liabilities, 30 lakh rupees. Any problem, people? Online people, any problem so far?
No, sir.
No, sir.
Fantastic.
No, sir.
Now, next is what, people? Realize all the assets and pay off all the liabilities. So by selling the assets, how much money are you getting, people? The question very clearly said that all the assets have realized put together 24 lakh rupees. So what is the entry for realizing the money? Cash account debit to realization. In realization, buy cash. Buy cash, 24 lakh rupees. And simultaneously do the posting in the cash ledger, people. So to realization account, 24 lakh rupees. 24 lakh rupees. Now, the question is silent about the payment of liabilities. So what do we assume? The entire money is paid at the book value. But have a look at this. The total money that you have already in hand is 1 lakh. And upon selling the assets, you have received 24 lakh. So in total, you have only 25 lakh. Whereas the liability that you're supposed to pay is 30 lakh rupees. So you are having a deficit of 5 lakh, shortfall of 5 lakh. So here, like I said in last class, I'll pass one part of the entry here in the realization account as to cash 30 lakh rupees. But in cash, don't pass the entry. As of now, don't pass the entry. So to cash. How much, people? 30 lakh rupees. 30 lakh rupees. Now tell me, people, what is the loss that you're getting? What is the loss that you're getting? This and this is gone. 59 lakh worth of asset, you fetched 24 lakh rupees. So what is your loss? 30?
35 lakh.
35 lakh is your loss. So by realization loss. By realization loss. 35 lakh rupees. Can you please tell me the breakup one by one? G's capital is 7 lakh. M's capital 7 lakh. And W's capital, how much? 21 lakh is the loss. Oh my God. And what is the total, people? No, total on the credit side or debit side. 89 lakhs? Okay, 89 lakhs. We immediately, without forgetting, post the loss on the capital account. So in the capital account, what is the posting? To realization loss. 7 lakh rupees. 7 lakh rupees and 21 lakh rupees. Any problem? Online people, any problem?
No, sir.
No, sir.
No, sir.
Now, in pencil, please tell me what is the balance? We have to pay 15 lakh rupees. 15 lakh rupees on credit side. This much money we have to pay to the partner. And from the partner, we have to recover how much, people? 7 lakhs. 15 minus 7. What is the net amount that we have to pay?
8.
8 lakh.
8 lakh is the net amount that we have to pay. Similarly, for Murray, 13 lakh is the money that we have to pay. But from that, we'll have to receive 7 lakh rupees. So what is the net amount that I have to pay? 6 lakh rupees. But for Wilkins, we have to pay him 2 lakh rupees. But we have to recover from him 21 lakh rupees. So in net, how much we are supposed to recover? 19 lakh rupees is the net amount that we have to recover. So by balance carry down. You did not do it, just observe. This is to balance carry down. by balance brought down. How much it is? 8 lakh, 6 lakh and dash. And 2 balance brought down. 2 balance brought down is 19 lakh. If the balance brought down is coming on credit side, if the balance brought down is coming on credit side, what balance is this, people? Credit balance. What does credit balance means? This is the money that firm has to pay to the partner. This is the money that the firm has to pay to the partner. Okay. For that, firm does not have sufficient money. Why? Because I have in total 25 lakh rupees. Whereas to pay outside people, I need 30 lakh rupees. There itself, I'm falling short of 5 lakh rupees. Apart from 5 lakh rupees, I need this much money to pay further. 8 plus 6 put together, how much? 14 lakh rupees. 14 plus 5, how much? 19 lakh rupees. So if this fellow brings in 19 lakh rupees, I'll pay 5 lakh to the external liability holders and remaining money to these two people, game over. So if any balance brought down is coming on debit side, we call this as debit balance item. Debit balance item means what? It is asset. Asset means what? Anything that I own it or anything that I expect to receive in future is asset. So this much money I'm expecting to receive from Wilkins. Firm has to receive this money from Wilkins. Any problem? Now the problem is the firm approached Wilkins that Wilkins, you have to pay us 19 lakh rupees. If you pay 19 lakh rupees, if you bring in 19 lakh rupees, the entire game will get over. We'll pay out of this 19 lakh, 5 lakh to the external liability holders and remaining 14 lakhs to the partners. With that, the dissolution process will get over. Unfortunately, W was declared as insolvent. Who declared W as insolvent? Court. W would have applied or somebody else on behalf of W would have applied where they have declared W as insolvent, which means not one naya paisa you could recover from his private estate. Now the question is, if one naya paisa also you could not recover from his estate means from where will you recover 19 lakh rupees? Where will you recover 19 lakh rupees? Imagine you are external liability holders. You are external liability holders. You want money. Now what will you do? Wilkins has become bankrupt. Understood. So it is very obvious that you'll go and ask Garner and Murray. Obviously, no, because all the three put together is one business. So external liability holders has done the business with the firm. If one partner has become bankrupt, let him be. Other two you pay. Other two you pay. Nowhere in the question they mentioned that Garner and Murray are insolvent, which means Garner and Murray are solvent. Now the question is, who should bring in the money? Who should bring in the money? What does Partnership Act says? What does Partnership Act says that if a partner has become insolvent, the deficiency has to be borne by the solvent partners. Has to be borne by the solvent partners. Or in fact, law, if you go and observe, there is no further information about this. In what ratio I should split? Who should take it? Who should not take it? Nothing is mentioned. So now what you tell me, people, what are you supposed to do? What are we supposed to do in this case? In the profit sharing ratio, you're supposed to distribute the loss. They will not agree. Garner and Murray did not agree this. नहीं है specified. In law, that is, sorry, in the partnership deed, there is no deficiency ratio that has been agreed. You will say that you should distribute in the profit sharing ratio. Why will Garner and Murray agree that? Why should they agree that? Sorry? They are binding by the act of the other partners to the extent of their share. If Wilkins has become bankrupt, you can't ask his share of money to be brought in by us. Imagine, no. If you are Wilkins, sorry, you are Garner and Murray. Imagine you are Garner and Murray. You have to bring in 19 lakh rupees. Today, very comfortably, you're telling that other partner has to bring in. If you are Garner and Murray, your partner has become insolvent, whether you will bring 90 lakh from your home, you will try your level best to fight. You will try your level best to fight in the court of law. Like that, these two people started fighting to understand how this case went. At one point of time, Wilkins was declared insolvent. There is no hope to recover any money from that person. So now all the external liability holders started pressurizing whom? Garner and Murray. Between Garner and Murray, dispute started erupting. You pay, I pay, you pay, I pay. They started blaming each other. Like, I will not bring, you bring in the money. Because at that point of time, and even today, there is no clarity in the law that in such case, what are you supposed to do? So Garner said that I can't bring in the money. He's fighting with the external liability holders. He's fighting with Murray. Murray is fighting with Garner, no, I will not bring in the money. He's fighting to the external liability holders and I will not bring in the money. Why should I bring in the money? In fact, I have to get 8 lakhs and 6 lakhs from the business. Where is my money? I'm supposed to get money from firm. On top of that, you are telling that bring in more money. I will not accept it. Who's saying? Both Garner and Murray. So Garner started fighting with Murray and Murray started fighting with Garner. Both of them fighting. They went where? To the court of law. Now there also, both the parties were represented by the lawyers. Both the lawyers fought in such a way that even at one point of time, court could not understand what kind of settlement can be done because the settlement should be true and fair. It should be fair on all the parties. It should not reflect any kind of unfairness anybody. So court will not just like that tell, oh, nothing is agreed, share in the profit sharing ratio or share equally. Law cannot say like that. Court cannot say like that. So court will observe all the facts very deeply and minutely. When the court is making a judgment, they would make a judgment in such a way that not one person or not 1% chances that the other party is suffered or getting aggrieved. So in such a way, they have to make the decision. This case kept on being dragging for long time. Up to several years, this case has been going on. One conclusion could not come. They could not come to one conclusion. In this entire process, tell me people, who was the person who was suffering? Who were suffering here? It was not Garner. It was not Murray. It were the external liability holders who were suffering. Why? Because you may think that 25 lakh rupees money is there. No. In that, we can settle the liability holders to the extent of 25 lakh rupees. So remaining 5 lakh people are all hold is what you're thinking. What are you saying? 25 lakh money is there. No, sir. Out of that, pay 25 lakh to one set of people. Out of 30 lakh people, 30 lakh liability, you pay 25 lakh liability. Remaining 5 lakh you keep pending. Do you think these 5 lakh people or these people who are holding 5 lakh worth of external liabilities are idiot? You can't decide. Imagine all these are unsecured liability holders, which means all of them have equal chance to receive money. Imagine you have 4 friends. One person I pay the money, other 3 if I don't pay the money, what will you feel? Unfair, right? So in this entire process, what they did is they never paid anybody. Imagine I'm a creditor who has given the goods on credit. I'm supposed to recover 3 lakh rupees from this organization. Because of their internal fight, I never got the money. And this fight went to the court of law. Since the judgment has not come, until the case was dragging, I was blocked with them. I could not get my money back. At one point of time, the judge said that, look, boss, I have to make a proper decision. Before that, I'll tell something. So before he gave his final judgment, he said that one solution can be done as of now. In this entire process of fighting, which is happening between the partner, which is internal issue, external people should not be suffering. External people should not suffer. To remove them from suffering, the court came out with a beautiful statement. Court said that in case of insolvency of any one or more partner, the other solvent partners were having credit balance, were having positive balance to the extent of the loss, which loss? Realization loss. To the extent of this loss, this 7 lakh is lost. This loss is caused by whom? Garner and Murray. To the extent of this loss, you bring in the money. To the extent of this loss, you bring in the money. This is not the final judgment. Judge, as of now, they said that, look, boss, 7 lakh and 7 lakh. This is a loss that has been created by you. To the extent of this revaluation loss, you first bring in the money. Now, 7 lakh plus 7 lakh, how much money should come in? 14 lakh money will come in. Imagine now, 1 lakh plus 24 lakh plus 14 lakh more. How much is the total money now? 39 lakh rupees. Can I say with this money, at least you can make the payment to the external liability holders and you can make them free from this case or from the fighting that is going on. You can keep them away from this entire process. You are fighting internally, and because of your internal fight, external people who trusted you, who came with you to do business, they are suffering. How is it fair? So judge said that this is not fair. Hence, we have to do justice to external liability holders. So Garner and Murray were the 2 solvent partners having credit balance. We said them, you bring in the money. You bring in the money to the extent of the revaluation losses that you've recorded. In other words, realization loss. To the extent the realization loss that you've recorded, that loss, to that extent, you bring in the money. Because you are responsible for that loss. And that loss, to that extent, you bring in the money. Now sufficient money is come into picture. With this, you pay the money to external liability holders. And in what order the payment should be given, to whom the payment should be given, the court had decided. Okay or not okay. Now the problem is not yet solved. Now the problem is not yet solved. The money what should come inside is 19 lakh. But how much has come in? Only 14 lakh. 19 lakh should be coming from whom? The other partner. Not from these people. So now the question is, after this money is coming in, what is the next step that is to be done? That is what I'm yet to discuss. So far, can I do the entry? I'll go step by step, because if I take everything in one shot, you'll get confused. So now, till point number 5, we've completed. Whatever is the realization profit and loss that you have transferred to the partner's capital account in the profit sharing ratio. Till this, no problem. Now, sixth problem. Calculate the amount due to be received from insolvent partner as mentioned in the question. What is the amount due to be received from insolvent partners? We already calculated 19 lakh. This step also done. Now, from this 19 lakh rupees, check in the question, are you able to recover something or not? If the question says that Wilkins had a property and we could sell that property, and from that we could recover 4 lakh rupees, means minus that 4 lakh amount recovered, what is the balance amount? 15 lakh will be called as the amount of deficiency of the insolvent partner. So in this question, I did not give you any recovery money. But the next question that we are going to solve in ICA module, they will tell that out of so much money, this much money could be recovered. So balance money which could not be recovered from the insolvent partner, that is the deficiency. Okay, not okay. The amount of deficiency of the insolvent partner is to be identified and pass the entry for the same in capital account. Now hold on this. So we have to first calculate the deficiency of the insolvent partner, which we have calculated, which is 19 lakh rupees. Who's deficient partner here? Who's insolvent partner here? W. From W, how much are we supposed to recover? 19 lakh. Are you able to recover anything? No. So entire amount is deficiency. It's a shortfall. Yes or no? Up to step number 6, do you have any problem? Now, in case of loss on realization, all the solvent partners, who are the two solvent partners here? W and G and M, Garner and Murray are the solvent partners. All the solvent partners will bring in the cash. They have to bring in the cash to the extent of loss on realization in order to increase the cash balance so that the external liability holders could be paid. Any problem here? No problem. So can we pass a journal entry for that? We have to get the money from solvent partners. So what do you think will be the journal entry? So money is coming in, sir. Cash account debit. How much? 19 lakh. Sorry, 14 lakhs. Who's bringing how much? To the extent of the realization loss, they'll bring in the money. So what is the realization loss of Garner? Garner ka realization loss is 7 lakh and Murray ka 7 lakh. 7 plus 7 how much? 14 lakh. Credit the giver. Who's the giver of the money? Garner. So 2 G's capital and 2 M's capital. How much? 7 lakh, 7 lakh. So in cash ledger, 2 G's capital and 2 M's capital, this 14 lakh you have to record. Any problem? So in the cash ledger, please record 2 G's capital 7 lakh, 2 M's capital 7 lakh rupees. Similarly, go to partner's capital account and write down there posting. By cash 7 lakh rupees and 7 lakh rupees. Any problem? For convenience, can I erase all of these? Now this is not required. All in people, so far comfortable?
Yes, sir.
Yes, sir.
Everybody. Now look at the next step, people. I'm repeating one more time. In case of only loss on realization, this profit on realization, then step 7 will not come. Step 7 will come into picture only when there is a loss on realization. In case of loss on realization, Varun, all the solvent partners will bring cash to the extent of loss on realization in order to increase the cash balance so that the external liability holders could be paid off. Now, since we have sufficient money, can I say we can close the realization ledger? Sir, realization ledger is already closed. This payment entry, can I pass in the cash account? Adavade, realization to cash. In realization account, posting done. In cash account, posting is not yet done. Why? Because we didn't have sufficient money. Without having the money, had I put the entry here, my cash balance would have gone in negative balance. That is in debit balance it would have gone. Sorry, in credit balance it would have gone. Cash account can never go into credit balance. Cash account can never go into credit balance because you can't spend money more than what you have. For example, here I had 25 lakh rupees. The payment done is 30 lakh rupees. So 5 lakh balance is coming here. 5 lakh balance is coming here. And balance brought on 5 lakh is coming on credit side. Is this allowed? How is it possible that you have 25 lakh rupees in cash account, but you paid 30 lakh rupees? From where did the 5 lakh came? In cash, it is never possible. Bank possible when if bank is having OD facility. So extra 5 lakh who gave? Banker gave as loan. So in bank, OD ledger, credit balance allowed. In cash, you will never get any credit balance. You will not believe when I was doing auditing for one of the client in Coimbatore, the cash ledger of that organization is going in credit balance. Can you believe? Looking at the cash balance coming on liability side, I got mini heart attack. So what they've done is they have not recorded few receipt entry. They record all the payment entries properly. Few receipt entry they didn't record. So receipt is not there means what? Inflow is less, outflow is more. That way what happened? It became credit balance. That's the reason. And I'm telling you, this is something you'll practically see also. You will see it practically. I'm telling you. So here, please tell me what is the payment journal entry and what is the posting? Realization account debit to cash. In cash, by realization. By realization. What is this? Payment of sundry liabilities. How much it is, people? 30 lakhs. Any difficulty so far? Any difficulty so far? Online people, any difficulty so far?
No,
No,
sir.
sir.
No, sir.
No, sir.
Step 8, very important step. Next, collect cash from insolvent partners as much as he can pay. Net recovery from his estate. How do you calculate? The question will tell you, this is the total realized value of the private estate minus private liabilities. Remember, when I took the dissolution topic to all of you in 12th CBC, I told you, whenever you attack the private assets of the partner, you always have to segregate that money first for their private liabilities. For example, imagine Wilkins ka balance sheet. This is Wilkins ka personal balance sheet. In personal balance sheet, he will have a personal home loan. He will have multiple assets. He'll have multiple assets. Now the external liability holders will take some amount of their asset and use that money for paying their business ka liability. This is called as a partner having unlimited liability. What is the worst feature of partnership? Unlimited liability. What is the meaning of unlimited liability? When the assets of the firm is not sufficient to pay the liabilities of the firm, then such liability holders will attack the assets of the partner. Will they attack the assets of the partner? Here the law has set a rule that when you take the money from their personal assets, always segregate the money for their personal liability. So let's suppose the personal asset is total 10 lakh. And if personal liability is 2 lakh, from this 10 lakh minus 2 lakh and balance 8 lakh is the net asset that you can realize from their estates. You can't take entire money because before you have the right over this asset, this liability holder has got the right over the personal asset. Correct? In my personal balance sheet, I'll have personal asset. I'll also have personal liability. On my personal asset, who's got the first right? The personal liability holders has got first right. அவனுக்கு கொடுக்க வேண்டிய amount நீங்க segregate பண்ணிடுங்க. Balance amount is there, no? That can be used it for the payment of the business liability. Okay, not okay. So now, what is the realized value of the private estate? So in my example, I told 10 lakh rupees. 10 lakh is the total amount to be recovered from the assets of Wilkins. How much is private liability? Let's suppose 2 lakh. So what is the net asset realized? Net recovery from the estate, 8 lakh rupees. 8 lakh rupees. Now, you have to calculate the next deficiency amount. How do you calculate deficiency amount? Total amount due from insolvent partner was 19 lakh. In that, how much did you recover from the estate of the partner? Private net asset recovery, 8 lakh. So how much is the deficiency? 11 lakh. Got it, not got it? But in this case, the question very clearly said that we could not recover anything from their personal assets, which means the realized value of the private asset is how much? 0. And private liability, 0. So net asset recovery is how much? 0. Amount due from insolvent partner, 19 lakh. Recovery, 0. So full 19 lakh is deficiency. Full 19 lakh is deficiency. Any difficulty here? Any difficulty here? Online people, any difficulty here?
No, sir.
No problem.
sir.
Okay. So now can I say the amount of deficiency calculated is 19 lakh rupees? Okay, not okay? Now what are we supposed to do? This 19 lakh deficiency is there. No, we have to shift the burden of that on the head of solvent partners. Which partners? Solvent partners. Now, somehow I have to close. Somehow I have to close the capital account of W. W's capital account has to be closed. How will I close it? This I will transfer. The burden of this I will transfer on the head of the solvent partners. This is called as a partner having unlimited liability. So if your co-partner is not able to bear any loss, the burden of that loss will be shifted on your head. This is called as a partnership firm having unlimited liability. So somebody's sin who is sitting and enjoying that sin. The other partners, other two partners who has not committed crime itself. How fair it is. That is partnership. People don't like this concept. That's why people started moving to LLP and companies, because there we have limited liability, limited liability. So in case of LLP and companies, if these two people, if W is declared insolvent and if nothing could be recovered from his estate, we will transfer this to deficiency account and we'll close. The procedure is different. We will not shift the burden of that to the head of the solvent partner. Got it, not got it? Now here, this is partnership question, and here the burden has to be shifted on the head of the solvent partners. Solvent partners. Okay, not okay? Now, this 19 lakh rupees should be distributed to the solvent partners in the deficiency ratio. Deficiency ratio. Now, the question is, where will I find the deficiency ratio? Two things the law has said. Such deficiency will be borne by the other solvent partners in the deficiency ratio as per the partnership deed. In the partnership deed, if you had agreed one deficiency ratio, in that deficiency ratio it will be accepted. For example, the deficiency ratio is 1:2:3. So now here, Wilkins has become insolvent. So who are the two solvent partners? Garner and Murray, G and M. This will be the deficiency ratio. Imagine Murray became insolvent. So what is the deficiency ratio? 1:3. So in the partnership deed, if there is any specific deficiency ratio, in that deficiency ratio, you will distribute the loss between the solvent partners. Now the question is, sir, in the partnership deed, if the deficiency ratio is not agreed, then what to do? You can't say equal ratio. In fundamentals topic, I told you, if the question is silent about the profit sharing ratio, always assume to be equal. That is for normal profit sharing ratio, not the deficiency ratio. That logic you can't apply. Nor you can say that in the existing profit sharing ratio, I will bifurcate the loss. That also is not allowed. So what ratio will you take here? Here the deficiency ratio is given in the judgment of Garner versus Murray case. So now the court has given the judgment that whatever the deficiency is there in the heads of insolvent partner, that has to be distributed to the heads of solvent partner in a specific ratio, what I say. And you want to know what they've said in the judgment? They said that check whether the capital balances or the capital, or that is method of maintaining capital of the firm is fixed or fluctuating cap method. The methods of maintaining capital account is fixed capital method. Fixed capital method. Fixed capital method means what? You have two accounts. One is capital account. Second, you have current account. So whatever is the balance brought down of the capital account in this ratio, the deficiency has to be borne. This becomes my, in fact, deficiency ratio. This is my deficiency ratio. Whatever is the capital balance. Imagine, in this case, please tell me, what is the capital balance of Garner and Murray? G and M. What is the capital balance? Imagine that is fixed method. Imagine 15 lakh and 13 lakh. In this ratio, you will distribute the deficiency. In this ratio, you will distribute the deficiency. The deficiency ratio will be the capital balance. Which capital? In the fixed capital method, capital is there, no? Pure capital balance. In that ratio, you will bifurcate. Okay, not okay? If the capital account is fixed, deficiency will be borne by all solvent partners in the ratio of their capital account. In the ratio of the capital account. So deficiency ratio will be equal to the fixed capital ratio. Fixed capital ratio. And remember, in FCA method, that is fixed capital method, always the partners will have credit balance. They can never have debit balance. The logic of this was discussed in the fundamentals topic. In fixed capital method, you cannot have debit balance because a partner cannot withdraw capital more than what he has contributed. So if I give 10 lakh capital, how much can I withdraw maximum? Only 10 lakh. So there is no way I can do over withdrawal and convert the capital balance into debit one. So in fixed capital method, always the partners will have credit balance, credit balance, credit balance. In depth, I've done this discussion in the fundamentals topic. Okay, not okay. Sir, if the method of maintaining capital is fluctuating capital method, then what are we supposed to do? In that case, the law says that if the capital account is fluctuating, deficiency will be borne by solvent partner. Which solvent partner? That solvent partner having credit balance only in the ratio of capital. Which capital? That capital which is coming after all the other adjustments, but before the dissolution related adjustment. Now here is where people fall in trouble. They feel gone. Ghatiya, I agree. They've screwed like hell. And कौन बोला? Now, tell me people, out of these two methods, in which method high masala is loaded? In this method, masala is loaded. In exam, if the question comes, will you get masala question or non-masala question? Full masala question. Now, this is what I have to explain. Listen to me very carefully. In fluctuating capital method, the deficiency ratio, DR, deficiency ratio is going to be the ratio of capital of fluctuating capital, FLCM. 2 points to be taken care of. When you take the ratio of capital, you have to take only the credit balance. Which partner is having credit balance? No, his amount only has to be taken into consideration. A partner having debit balance, his ratio should not be taken into consideration. For example, let's suppose Garner's capital account balance is 15 lakh, credit balance. Murray's capital account balance is 13 lakh, credit balance. Imagine there's a fourth partner called as Ace Capital. Imagine there's a fourth partner. He's having 10 lakh rupees as debit balance. Now, 10 lakh as debit balance means what? This person itself has to bring money from home. How much money is supposed to bring in? 10 lakh rupees. He has to bring in from home. இது கொண்டு வரதுக்கே வழி இல்ல. இது இல்லாம deficiency வேறயா? Correct? No. This person is already supposed to bring 10 lakh from home. On top of that, if you ask him to bring him deficiency of the other partner, he can't bear it. And remember, A is not insolvent, A is solvent. So judge is telling that, look boss, the burden of Wilkins I'm not putting on you because poor fellow, you itself have to bring 10 lakh rupees. On top of that, if I ask you to bring the Wilkins ka paisa, you will die there itself. So looking at your weak and feeble condition, I feel better it is you don't take too much stress. You take care of your stress. What is your stress? Bringing 10 lakh rupees, Krish, that is his biggest stress. Bringing that money itself is the biggest thing for you. You don't take stress of Wilkins. Now the stress of Wilkins is put on whom? Garner and Murray. Why? Because they have credit balance. They have to withdraw so much money from the business. So they have been asked to bring in the money. They have been asked to compensate the deficiency, not bring in the money. Deficiency is put on the head of Garner and Murray. Let me complete it. First point, clear or not clear? This is first adjustment. So now, again, I'm coming back. Whatever deficiency is coming off the insolvent partner, under fixed capital method, the deficiency ratio is nothing but the ratio of the fixed capital. In the fluctuating capital method, the deficiency ratio is ratio of fluctuating capital method. That is fluctuating capital amount. Here, 2 points have to be taken care of. When you're calculating the deficiency ratio, you take into consideration only that partner who's having credit balance, solvent and credit balance. If any person is having debit balance, who's solvent and debit balance, don't take him into consideration. Okay, not okay. Online people, okay, not okay.
Okay, sir.
Okay, sir.
Second condition is that whatever capital Garner and Murray is having, whatever the balance brought on they're having, no? With that, you do all the other adjustments except adjustment of dissolution. Other adjustment means what? Imagine I told you an example. Credit amount is wrongly recorded. There is some error in the accounts. Rectification of error you can do. So if there is any rectification of error, you can do plus and minus of rectification of error. Okay, not okay. Normally, if you have to pay any interest on capital, salary, remuneration, that is normal transaction. That is not dissolution transaction. Imagine today the firm is getting dissolved. Up till today, Garner and Murray will get salary or not, IOC or not, remuneration or not. From them, you have to recover IOD or not. So all the normal adjustments, you do it. After doing all the normal adjustments, you will get one balance brought down. In this ratio, you distribute. What adjustment should not be done? Dissolution related adjustment should not be done. What is dissolution related adjustment? The revaluation loss entry game, no? That should not be done. The revaluation loss ka money, both of them bought, no? Revaluation loss ka money they have brought in, no? That should not be done. Any dissolution related adjustment in the capital account should not be given impact. Without giving impact of that, before that, whatever is the balance brought down, that you take it for the purpose of calculating deficiency ratio. Okay, not okay. Now come back here. In this question, please tell me, do you have fixed capital method or fluctuating capital method? Looking at the question, tell me, is it fixed capital or fluctuating capital? There is nowhere mentioned fixed capital. So purely it is fluctuating capital method. In FLCA method, two things has to be taken care of. In calculating deficiency ratio, you have to take care of two things. One thing is what? I should take the credit balance of the solvent partners. Debit balance of solvent partners should not be considered. So I have to go and check which partner is having credit balance. And one more thing, what you have to take care is, while taking the amount, do all the other adjustments except the adjustments of dissolution. So before you do dissolution adjustment, whatever is the previous capital balance, that in that ratio you have to distribute. Okay, not okay. So this point you'll check first, and this point you'll check second. First, arrive at the balance. Which balance you have to take into consideration? Adukapra see who is having credit and who is having debit. So now tell me, people, here, which is that capital which is coming before, dissolution adjustment? If you observe partners capital very carefully, this is dissolution adjustment. This is also dissolution adjustment. If I eliminate these both, what is my capital balance before dissolution adjustment? This is my capital before dissolution adjustment. Okay, not okay. Okay, not okay. Now, guys, don't panic. I'm telling you, we have 3-4 questions to work out. So again and again, if I repeat, no, and we work out all the 4 questions in class, you'll get a complete hold. I'm telling you, it's not a difficult topic. It's a very, very easy topic. Since you're learning for the first time, you might find it difficult. For that matter, when you started 11th accounts for the very first time, you felt difficult. In 12th also, you felt difficult. But eventually, you learned it. And you got a confidence to take up a daring course like CA. Nothing is impossible. I'm telling you, it's a topic which you're learning for the first time, so that is making you uncomfortable. But that is not a challenging one, not a difficult one. It's a very easy topic. It's a very, very easy concept. Okay, not okay. Now, please tell me, people, what is the deficiency ratio? Deficiency ratio is 15 lakh is to 13 lakh, which is nothing but 15 is to 13. So whatever is deficiency, 19 lakh is there, no? That I have to split in the ratio 15 is to 13. Any difficulty? Any difficulty? Now, below that, working note number 1. Calculation of amount of deficiency of Wilkins. How do you calculate amount of deficiency, people? Amount due from partner, the whole multiplied by net recovery from estate. Net recovery from estates of insolvent partner. Please tell me, what is the amount due from the partner? This will come from the capital account. And this will come from the question. This information will come from the capital account. You will calculate. And this will be given in question. Amount due from the partner is 19 lakh rupees. Amount due from Wilkin is 19 lakh rupees. And the question said that nothing is required from his estate. So can I say 19 lakh rupees entirely is the amount of deficiency? Next, working note 2. calculation of deficiency ratio. Now, balance brought down of Garner's capital and Murray's capital. How much it is? 15 lakh and 13 lakh. Plus or minus other adjustment in bracket except dissolution adjustment. Any adjustment is there? Not there. So after this, what balance is coming? 15 lakh and 13 lakh. So in this ratio, you will split the deficiency. This is my deficiency ratio. Any problem? This is my deficiency ratio. Any problem? So this balance brought down came from where? It came from question. Question will tell you this is the capital balance of the partner. From that, I did plus and minus of other adjustment. Which adjustment? All the other adjustment except dissolution adjustment. Then you'll get one balance brought down. Then you'll get one balance brought down. In this ratio, you will distribute the deficiency. Any problem? Can you please tell me the journal entry for distributing the deficiency? W. Wilkins is having loss. 19 lakh is loss, debit balance. To cancel it, I have to give a credit. So to Wilkins capital, 19 lakh rupees. Now this loss is shifted on whose head? Garner and Murray. So G and M will bear the loss. To increase the loss, we have to give a debit. Loss is debit balance. To increase loss, we have to give a debit. And losses will always decrease their capital. To decrease capital, you have to give a debit. So Garner's capital account debit, Murray's capital account debit to Wilkins capital. So 19 lakh rupees in the ratio 15:3. Sorry, 15:13. How much it is? 10 lakh? 857.142. So 857 is correct. 10 lakh 17,857. This is for Garner. What is for Murray? 8 lakh 82. 142.45. 45 means we'll round off to make it 3. Because 7 plus 3, 5 make it round 10 will become. We'll do it round off. Okay, not okay. So tell me the posting, people. Tell me the posting. I told you whenever you have a compound amount, break that into that many parts which is there on opposite side. Opposite side, how many parts are there? 2 parts are there. So 110 lakh 17,857 and 8 lakh 82,143. Record this amount and this amount in the credit side of insolvent partner, Wilkins account. And who's the opposite partner? G and M. So by G's capital, by M's capital. In whose column? Wilkins column. So go back to your capital account. By G's capital, by M's capital. 10 lakh, how much people? 857. And how about the other one? 143. Any problem, people? Next is record this in the debit of G's capital. Who's the opposite partner? To Wilkins capital. So to Wilkins capital this much and to Wilkins capital this much in the ledger of account of M. 857. 857 is it? Sorry. So to Wilkins capital 10 lakh 17,857 and 8 lakh 82,143. Any problem, people? Online people, any problem so far?
No, sir.
No, sir.
Now can I say after this journal entry, Wilkins ka ledger is automatically closed. Wilkins ka capital balance is closed. Now tell me, people, what is the balance of G and M? What is the balance of G and M? I'm just writing two balance chuma for namesake. How much it is? 15 lakh plus 7 lakh minus 7 lakh. So this 7 lakh and this 7 lakh gone. So ultimately it's 15 lakh minus 10,000, 10 lakh 17,857. 15 lakh minus 10 lakh 17,857. 4 lakh 82,143. And what about M? 13 lakh minus 8 lakh 82,143. We have to pay 13 lakh to him and recover 8 lakh 82,143 from him. 4 lakh 17,857. Can you add these both and tell me the total amount? 4 lakh 17,857 plus 4 lakh 82,143. 9 lakh is there? Okay. Now exactly if you go to your cash account, here also the balance available should be 9 lakh. Please check, are you getting the balance 9 lakh or not? Please check, are you getting the 9 lakh balance or not? Exactly matching. So once you complete all the entire step, the amount that you have to pay to the remaining partners and the cash balance will perfectly tally. Perfectly tally. Imagine we had partner A also here with debit balance. So after deficiency ratio, after deficiency entry, you have to receive money from A. Then pay money to Garner and Murray. So if any one partner is having debit balance, solvent partner now, from him will recover money. No. So one additional entry will come for recovery. If that has come, we'll have sufficient money to pay to Garner and Murray. Okay, not okay. So can we do the cash entry? Final amount to be paid is this amount, 2 cash. Two cash. This is the final answer, people. This is the final answer. In cash, it will be by Garner's capital and by Murray's capital. Can you tell me the amount, please? 4 lakh, 80 to 143. One more. 17,857. With that, your answer is over. Any difficulty? Can we do the steps one by one? One more time. One second. Let me just summarize. Now there's one note I gave here. If any partner under fluctuating capital method is having debit balance, then the deficiency of insolvent partner is not shifted, or that will not be borne by such partner having debit balance in her or his capital account. That is in the fluctuating capital. On this point, guys, this point you have to check only in case of fluctuating capital method. Because in fixed capital method, the partners will never have debit balance. In fixed capital method, it will always be credit balance. So that problem will not come in a fixed capital method. But in fluctuating capital method, partners can either have credit balance or debit balance. Credit balance means what? You have to pay money to the partner. Debit balance means what? He has to give money to the firm. So law says that is court of law says that, judge said that this guy, if he brings his money, that itself is a big thing. To this person, if you tell him to bring further money, then this case will not end. I want to put an end to this case. I don't want to drag the case. So he said that the person is already having debit balance, let him bring his money itself. Other two partners who are solvent, no, and having credit balance, we will ask them to bring money from their home. In fact, did you bring actually any money from home? Here, the moment you pass the deficiency entry, did you bring any money from home? No. The moment the deficiency entry passed, what happened, you know? The amount that we had to pay to Garner and Murray earlier was how much? 8 lakh and 6 lakh. That got reduced to 4 lakh. So by shifting the deficiency, their credit balance got less. So basically by doing this, what happened? No, the money what they're supposed to take home got reduced. So nothing actually came from their home. Nothing came from home. Understand the logic? When we shifted the burden of Wilkins on these two partners, their credit balance got reduced. Imagine, had you shifted the burden of this on debit balance means what? Already that person has to bring in money. If you transfer the deficiency, he has to bring in more money. So bringing in more money will be a burden on him. And the judge did not want to put the burden on that partner A. I'm telling, imagine there's a fourth partner A. A has already debit balance of 10 lakh rupees. If you shift the burden of that Wilkins on A, already A has to bring 10 lakh. By debiting his capital further, he has to bring in more money. So here A is supposed to bring in money. On top of the deficiency means more money. Instead, judge said that why can't we shift the burden on those partners having credit balance? By doing that, what happens? Their money what they have to take from the business, which is 8 lakh and 6 lakh, will get reduced. They don't have to bring any money from home. So hence, judge has come out with this kind of judgment. Got it, not got it. Why have they chosen credit balance partners alone to consider or bear the deficiency ratio? Understood the logic behind that? Honest people, logic is clear or not clear?
Yes, sir.
Guys, knowing the step is not important. Why the conclusion came that way, that understanding is very important. Because you might ask, how is it fair that you're not asking A to bear the burden? A is also partner, no. Like how Garner and Murray are bearing the burden of deficiency of the other partner, A also has to bear it. So what, he's got deficiency? So what, he's got debit balance? Arey Baba, if he's already got debit balance, by further debiting his capital, please understand, no. Here, Garner and Murray ka capital account be debited. Debiting means what? There's more pressure to bring in money. So already one person has to bring 10 lakh. If you further debit A's capital, he has to bring in more money. So for him, extra money is coming, no. For Garner and Murray, when you debited capital account, their credit balance got reduced. But they didn't have to bring in more money. Hence, keeping that logic in mind, they said that it is better that we ask that partner who is having credit balance to bear the deficiency. Okay, not okay. Online people, okay, not okay.
Okay, sir.
Yes, sir.
Till date,
Yes, sir.
in
Okay, sir.
law, there is no update being done. That if such kind of scenario happens, what to do? It's not been done. You might have a question that, sir, if such kind of things are happening, till Garner versus Murray case happened, okay, I agree. Law did not say anything. After that, they could have said no, because this is very old law. This judgment came out some decades ago. Why haven't they done the implementation in the law? To be very honest, they were lazy. They said very clearly that whatever judgment is given in Garner versus Murray cases, that you follow for all the similar situations. They didn't update the law. This Indian Partnership Act is dated back to 1932. Companies Act, old act was which act? Companies Act 1956 Act. So the act which came after that, that itself got amended as Companies Act 2013. Partnership Act never got amended because there is no intention to amend it. And then they don't want to amend it. What is the logic behind it? Why do they don't want to amend this? Why do they want people to suffer under Partnership Act? Because they want people to shift it to LLP. They want people to shift it to companies. Why? Because there's a benefit for the government. When you register LLP under LLP and companies, when you're coming out with the capital, no, on the capital amount, you're supposed to register it and pay stamp duty. That is revenue for the government. So they have made LLP and companies more organized. So they want everybody to eventually shift it to one fine day on LLP and companies. They can't compel it. Why? Because in LLP there are compliances. There are some legal compliances to be done, which will cost money to you. Such kind of compliance is not there in Partnership Act. So how can government tell no, you shift it to LLP and do all this filing work, take extra burden? So that burden they didn't want to put on the business people. So they said that if you want to do partnership, you do partnership. For partnership, this is the law that I've created. Which act? 1932 Act. அன்னைக்கு இருக்க சினாரியோக்கு இன்னைக்கு இருக்க சினாரியோ எவ்வளவு டிஃபரன்ஸ் இருக்கு. But they're not updated. They're not upgraded. They kept the old law because if anybody wants to use it, use it. Those who don't want it, don't like it. For you have created a new act called as LLP Act. You come under LLP. Hence, no modification is done in the old act. So in kind of this scenario where there's an insolvency, there is no recommendation from the act what needs to be done. They only referred one thing, whatever is discussed in the judgment of Garner versus Murray case, whatever outcome came from that case, take that case as a base and you do the solution. So wherever you have insolvency related questions, either in what you call law or in accounts, you will find this name very clearly mentioned in the book. Refer Garner versus Murray case. Have you come across this in your? It is there. Yeah. So you knew this case before itself. Rule is है करके समझ गया. Okay. But now you understood the depth. More point is there, but that is not required. That mirchi masala, what happened in case, that is not required. I told what is the base and crux out of it, that is more than sufficient. Are we clear? So now you are having some doubt. Now,
in case all partners get debit balance.
If all partners get debit balance, that case you have to wait for next class because steps to follow in insolvency all partners. Next step that is there. So your question is actually a question which will be solved in the next class. Now, next.
In case one partner has debit balance.
In case one part having debit balance, okay. Okay.
Credit balance. So deficiency issue I can directly will give.
Correct. So he's telling that imagine in this case, Garner, Murray, and Wilkins. Wilkins is insolvent. Murray is having debit balance. So Garner is having credit balance. So entire deficiency is shifted on Garner. Very simple. The logic is very clear. The deficiency of the partner has to be borne by the solvent partners having credit balance under fluctuating capital method. Now, in your case, for example, they are having fixed capital method. If fluctuating is debit, leave it. Fixed if they have, they're stuck. That's why in most of the cases, what people don't prefer is fixed capital method. Only fearing this, people don't have fixed capital method. They only follow one method called as fluctuating capital method. Everything they record in that itself. Boss, if you talk about unfairness about this act, I can talk a lot. The question is not fair and unfair. The question is, if this comes in exam, what are we supposed to do? Fair and unfair பேசுறேன் நான் நிறைய பேசுறேன் இந்த இடத்துல. இந்த ஆக்டே வந்து 32 ஆக்ட் நிறைய விஷயம் தப்பா இருக்கு அதுல மாத்தணும் எல்லாமே மாத்தணும். But they don't want to change because they want everybody to migrate to LLP. As simple as that. That's the logic behind it. Now, my simple question, people. Tell me, people, what is the step 1? Please recollect, tell me, what is the step 1? Sir, in step 1, we opened all the accounts, sir. Realization account, capital account, loan by partner account, loan to partner account, and cash account. In step 2, what did you do? We transferred all the assets and liabilities to the realization account. We transfer the capital balance to capital account. So opening balances we created in step 2. What did we do in step 3? What did we do in step 3? Tell me, people, fast. So in the realization account, all the assets were realized, all the assets were realized, and all the liabilities were also realized. Any problem? In step 4, what did we do? We got the closing balance of realization account, which is either profit or loss. And that profit and loss will shifted to the capital account in the profit sharing ratio. Any problem? Up to step 5, it is a common step. Now in step 6, what are they telling? What are they telling? Calculate the amount of insolvency. Okay, before that, what you can do is, before calculating deficiency, what you have to do is, if there is any loss on realization, ask the solvent partner, ask all the solvent partners to bring in the cash to the extent of loss on realization, to the extent of cash, sorry, to the extent of loss on realization, they have to bring in the cash. Okay, not okay. Okay. After that, what will you do? You will calculate the amount of deficiency of the insolvent partners. How do you calculate it? First, you'll go to his capital account and calculate what is the debit balance of Wilkins. From the debit balance, you check if there is any recovery of the amount. If there is any recovery, minus it. Balance amount is called as net deficiency. Now that net deficiency has to be split by the solvent partners in the deficiency ratio. Now where do you get the deficiency ratio? Either in the partnership deed act will be mentioned. If it is mentioned in partnership deed, go as per that. If not, then you have to follow the judgment which is given in Garner versus Murray case. In Garner versus Murray case, what they have told, you have to check 2 things. One, whether you have fixed capital or fluctuating capital. If you have fixed capital, deficiency ratio will be the ratio of fixed capital. If it is fluctuating capital method, then do one thing. Do all the adjustment in the capital account except deficiency related adjustment. So you'll arrive at one balance brought down. In that balance brought down, take the balance brought down of that partner who's got credit balance. In that ratio, you distribute. So now once you got the deficiency ratio, what did you do? You pass one entry. Partner's capital account to insolvent. That is solvent partner to insolvent deficient partner's capital account. By that virtue, what happens? The loss of the insolvent partner will be shifted on the burden of, on the head of solvent partners. Insolvent partners' burden will be shifted on the head of solvent partners. Once that is done, you calculate the final balance of the solvent partners, and that you make the payment. With that, the entry will close. And by chance, if any partner's got debit balance, you recover money from that partner, have sufficient money enough so that you can pay to the other 2 solvent partners. Okay, not okay. With that, all the ledgers at the end will tally. I have 3 more questions to do based on this. So next class, once we work out 3 questions, you'll have a complete clarity on this topic. Okay, not okay. नहीं आएगा पैसे फिर. So फिर क्या होगा? वो वाला point चला जाएगा. She's asking, sir, if the realization account had a profit. If relation has got a profit, in that case, what happens? That money that we get from the partner, no, that entry will not come. So that your deficiency will shift on the head of the other partners. Okay, not okay. But mostly that question will not be asked because ICA wants masala. Masala comes only in loss. Wherever extra step is there, harassment is there they ask in exam. Got it, not got it. Online people, okay, not okay.
Okay, sir.
Hello.
Okay, sir.
Let's stop the class here, people. Next class we'll do it on the next class on Tuesday. After your exam gets over, 4:30, I'll start my next class and I'll continue with this topic. So guys, that's all from my side for this session. I'll see all of you on Tuesday. Until then, bye-bye. See you. Take care.
Thank you,
Thank you.
sir.
Thank you.
Thank you, sir.
Thank you.